Good morning, everybody, and welcome to the DecisionPoint Trading Room. My name's Erin Swenlin. I'm going to be your host with my co-host here, my dad, Carl Swenlin. Want to welcome you all to the room, and welcome, Dad.
Thank you, and welcome, everyone.
Okay, so as everybody piles in the room, I do want to let everybody know, if you are watching this as a recording, that you can attend here live. It is at noon Eastern time. You should find the link below the YouTube video, or if you're watching on StockCharts TV, you can also go to our homepage, decisionpoint.com, and you'll see a link to register for the Trading Room Live. First, before we get started, I do want to remind everybody that we are not registered investment advisors, so all trading decisions are your own. Anything that you hear in this trading room, read in our blogs, you'll hear us talk about mechanical buy and sell signals. These are attention flags and should not be considered calls to action. All right, I think we're pretty much ready to get started. I do want to let everybody know who is here live that use the Q&A box for your questions and symbol requests. And then for all of you, you can use the chat room. Just make sure that you use the drop-down menu above your comments so that it goes to everyone, not just to Carl and I, because we don't monitor the chat room. We do monitor the Q&A box. All right, the recording is going, so we know we can get this started. Dad, I'm going to hand the screen over to you to get us started and let us know what's going on with the market and what our indicators were telling us on Friday.
Okay, and we should remind everyone, if you're having a problem with the focus of the show, try another browser, because I've run into that problem. I know other people have. Yep.
Make sure that setting on YouTube or StockCharts TV is set to HD. That will prevent any blurry charts. So let's go ahead.
Okay, starting out, I wanted to comment about my forecast. I think it's our forecast that we look for market to go down 50–60% from the all-time high. And this is just strictly based on the fact that other tops that were associated with wild excesses, like 2007 and then 2000, they both of those have experienced approximately 50% or more declines. And I heard, we had the 1972 top, and that was nifty 50s stuff. And then, of course, the 29 crash and bear market, which again was associated with excesses. So that being said, let me go to our current market. Right now, the S&P 500 SPY has broken out above a declining tops line, a short-term declining tops line. Notes that we have a longer-term declining tops line here, but we also now have a rising trend line from the June low. So it's which of these is going to win? Offhand, the longer line is the strongest, but of course there's no guarantee of that, but that's the general rule. Okay, notice that we have a PMO bottom here, not as sharp as I like to see, something like this, but still it's a pretty good looking PMO bottom, and goes along with this rally here. The US dollar in a rising wedge formation, we expect rising wedges to break down. That doesn't mean that the rally, or I should say the bull market in the dollar, is completely over, but we do expect to see some correction down out of that wedge. Gold is rallying, has been rallying since, well, this low here, beginning of September. USO in a declining trend, although it seems to be flattening out here, starting to move sideways. Fundamentally, I don't see how this thing can continue down. It seems evident to me that it should be going up, and that's why we use charts, because what we think it ought to do, sometimes it doesn't do. T-bonds, we've got a double bottom forming here, so that indicates that we may be having a rally starting just about any time. And if this support breaks down, that would be very bearish. The Bitcoin is in a rally, a very nice rally. On Friday, it was up about 10%, and today it's up right now 2%. Should mention that this particular chart updates on Saturdays and Sundays. So you have more trading days on this chart than you would normally on a one-year chart. The 10-year yield, it's kind of double topping here, but it's in a rising trend, and this top here might be taken out. Okay, today's rally. Where do you suppose it came from? Not Apple. Well, it's backed off some of what it was earlier. It was up 3.5%, and you'll notice that the market has pulled back somewhat, but it's still rallying.
Looks like that longer term trend is about ready to be broken. I don't know. The indicators are looking a little bit better. And if the rally is going to continue, I would think you're going to see more action out of those top 10, as we call them, the S&P 10. I would imagine we're going to start seeing some breakouts there.
I guess. Right now we've got a declining tops line. It's short-term declining tops line. So we'll see.
Yeah.
Obviously, to me, this rally is all it's the iPhone 14
yes.
now.
Yes, 14.
That's what that's all about right now. So we don't know what kind of duration we're going to get out of endurance we'll get out of this. While I'm on this group of charts, let me
please
go
let's
ahead
look at
and look at some of the large cap tech stocks. Here we have Adobe, possibly a double bottom forming here. We've got a trading range that goes back to the beginning of April. And so it could possibly see some action here. But again, that's looking at today's action for the broad market. It's not participating in that. Amazon, rising trend line. We've got a top above a top and a bottom above a bottom. So this is a pretty long duration rising trend. Sorry, I went to the wrong click.
Getting ahead.
Yeah. Google, it's down today. So maybe this rally is strictly an Apple rally. But it's been in a trading range since May.
Yeah, it still could make its way up to the top of that range, but certainly
sure.
these charts don't look nearly as bullish as Apple.
Meta, not doing well. It's consolidating, but this could be a basing pattern that will last. It could last for months, even years. That's not a prediction, just potential.
Mm-hmm.
Microsoft,
Yeah, not up
slight
that
rally
much.
today. It is a rising at a top above a top, bottom above a bottom. So in a rising trend longer term. And is this declining trend short term, it's broken out of there. Netflix, what is that? It's up about
Yeah, you can barely
on the
tell.
lows. It's up almost 50%.
Wow, you would never know.
No, you wouldn't. So people that bought it down here are feeling pretty good. Longer term, don't have good feelings about it. Although I'm still watching.
You're still watching it?
I'm still watching Seinfeld every night before bed. It's on there.
I think, yes, they did just, I think it was Netflix raised their prices. It's
Yeah, they
Netflix
did.
Yeah.
Yeah, I don't, well, it certainly wasn't a huge increase. Okay. I keep trying to get ahead of myself. NVIDIA bottoming here. But
I
we still
see it
don't
above
have,
that resistance, but yeah, the PMO doesn't look so hot yet.
now,
And that's a bottom below a bottom there. So that's not as good a setup.
right. And still a little bit iffy. Tesla, it's had a nice rally, and its PMO has turned up. We look at that general information. I wouldn't touch it with a 10-foot pole myself. Okay, moving back to, we've got some signal changes due on some of the sectors. XLP was looking like it was going to switch to a sell signal on Friday. The 20 was exactly on the 50. Normally, I would call that as a sell signal, but the price was so close. You see, on Friday, I thought, well, it could go above it on Monday, and well, here we are right now. They're exactly on top of one another. So.
Yeah, we had numerous dark crosses come in last week, and now with the rally coming in, it looks like a lot of those are going to switch back into buy signals or silver crosses, which is the 20 moving above the 50-day EMA.
Right.
So, and it's interesting because this sector and healthcare, we're looking not so great on the RRG when we looked at it on Friday. And yet the charts don't look that bad. So, it's a matter of more than likely that they're just not performing as well as the other sectors. But, the chart doesn't look that bad for XLP, especially when we look at that participation beneath the surface.
Right. It is in a rising trend.
Mm-hmm.
So if the market had continued on the way it was going, before this little rally here, we were definitely going to see some more sell signals, but not right yet. Not financials. I want to look at these are marginal.
Yes.
Signal changes right now. You got healthcare. Again, it's 28.97 versus 129.53. So it's still on a sell signal, neutral signal, isn't it? No.
Oh, it's still on a neutral because that 2050 happened.
Correct. I'm
Yeah.
looking at this crossover. This is the 200 EMA and the 20 and the 50 EMA. So we're
Getting
able to
close.
get a long-term buy out of this. So
It's tough though, when we look at sectors like XLV, really just mainly in a big giant trading range. But I know that
right.
biotechs were starting to look good. I'm sure we're going to be looking at some as far as the requests go. So it'll be interesting to see what some of those individual stocks look like.
And let's see, XLRE is close to going on a buy, as you can see here. And let's see, we're 42.95. It's still may not happen today, but surely this week if this trend continues. And lastly, technology is getting close to a buy signal. Not going to happen today, it doesn't look like. And so it's currently on a sell below the 200 EMA.
So we did get a question as we're doing this. Basically, I think from your last bit on the FANG Plus. So from the looks of the chart of Apple, that it has more upside, at least in the short term, in your opinion.
Let me get back there. Okay.
There we are.
Right now it's in a declining trend and it's broken this rising trend. So, and the potential is to be stopped at this declining trend line. So
you're not overly bullish on Apple
no,
at this point.
It's certainly a top above a top, bottom above a bottom. So it isn't a rising trend, but it's got to take out this resistance here. And
I bet do you mind looking at the weekly chart when you're done?
Okay, and notice that we have at this very moment, we've got the PMO rising, but we got a bottom there, but I don't, that we don't know if that'll hold through the close.
Yeah, because that's something I remembered looking at this weekly chart, as that weekly PMO is turning up above the signal line.
Right.
But at the same time, I mean, that's a pretty volatile looking pattern there, possibly a bull flag. I don't know, but looks pretty volatile and messy right now. But that's certainly encouraging, guys. Anton, Eric, I think is your actual name, if I recall. It does look like in the short term we have more, but the problem is as Dad said, that that declining trend is still in focus. So kind of want to see that, everybody says I wait too long for confirmations, but sometimes it's a good idea. And the move's already been made on Apple. So if you're considering getting in on Apple, I mean, for me, I'd need a confirmation that short-term declining tops trend line is going to break.
Another thing we can look for some market indexes to change signals. Right now, the NASDAQ composite is, let's see, 47.49 versus 47.52. It's currently on a sell signal, but very close to going on a buy signal. Let's just see how it goes the next couple of days on that. Could happen today.
A lot of whipsaw.
And I guess that's it for me.
Oh, okay. Let's see. While I'm doing my sector overview, guys, feel free to throw those questions in there for Carl. He loves to answer the questions. I know I do too. Not that we don't like symbol requests, but questions are always really informative for the room, and it gives us a chance to reinforce some concepts. So I'm going to take the screen now, and we're going to do a little bit more in-depth sector overview. Okay, so I'm going to just dive in here into the sector chart list. Most of these, all of these sector chart lists are available to our DecisionPoint.com subscribers. And you can get all of these with the annotations kept up to date on our website for any subscribers. So subscribe to either one of our reports or both of them, and you're going to be able to see these sector charts with Carl's annotations. I'm going to give you full credit for those annotations. So if you want to see what he's seeing on these charts, this is one of the really big benefits of having a DecisionPoint subscription. Got to get a little sales in there. Okay, so what I do for my DecisionPoint Diamond subscribers is on Friday, I always go through the sectors and the industry groups and give them a sector to watch and an industry group to watch. While I'm not going to give that completely away as to what I presented, I do want to show you a couple of these sector charts and look a little bit more beneath the surface and what we were looking at on Friday. These are going to change after the close, but this gives us a really good look at, what we were seeing Friday, and is that really coming true? The one thing I don't like, just looking out at the market overall when Carl was going over his charts, are a lot of what I would call wicks on candlesticks. You get that big push to the upside, and then the bears will bring it down, and it'll end up closing lower, but you end up with this giant wick on a candlestick. This is an OHLC bar, but you can get the picture. So the longer that wick is on top, the more pull, if you will, the bears had on getting it down lower in the day. So I'm not liking seeing these pullbacks during the day, but Dad, I know we can always see something different between now and the end of the close. I think you were intimating to that earlier.
Yep.
Okay, so comm services, super weak sector, but you can see that we're getting participation that is starting to increase here, but these percentages are still fairly low. So while we're seeing some improvement here under the surface, you can see that as far as relative strength goes, declining trend against the SPY. The SPY has been suffering, so you need to have some really good outperformance there. We're not seeing it. On the opposite spectrum here a little bit, we have a consumer discretionary, nice pop above the 200. But again, one of these long wicks, pull back to that 200-day EMA after breaking through it. That's not so bad because you get a breakout, and kind of the textbook response is usually a pullback or a drop back toward that breakout point, not necessarily to the breakout point, but close to it. So this could be really something involved with that. But knowing what we know about the market overall today, this is probably a characteristic that's just going to be on most of these charts. But discretionary looking pretty good under the surface. Again, you've got some percentages of stocks above their 20 and 50. That looks pretty good, but our silver cross and our golden cross in particular are still reading pretty low. Consumer staples, we already pretty much talked about. Just a few other notes that I would mention is that, yes, we are starting to see some of this outperformance here in consumer staples. But again, here's the big problem, really underperforming in comparison to the S&P. So it's not a sector that I would really be interested in looking at. Energy is starting to make its way back up after its pullback. We looked at the crude oil chart. Most of the industry groups within energy are affected by what's going to go on in oil, but we also have coal in there. And so it kind of travels a little differently. And you combine them both, and you're getting a nice little bounce here off the bottom of a rising trend channel. So, indicators are starting to look a lot better. We still have a PMO sell signal, but looks like we're going to get a whipsaw. You don't see a wick in the same way that you saw on those other charts. And then looking under the surface, we still have really, really good participation here. This is one of those sectors that, even though it had a giant pullback, it really didn't lose a lot of its internal strength. Financials, I think, are looking very interesting right now. You can see that the indicators are starting to improve, but again, and I don't have the thumbnail on, so let me put that on real quick. I don't know about you, but out there, but these eye tests of charts now and then, it's nice to have a thumbnail to help you out. So you can see that move up to the 200, but we are getting that pullback and another long wick on a possible candlestick there. But again, this is underneath the surface for financials, it's really starting to pick up more so than I had expected on Friday when I looked at it. You've got really a big increase in participation, so much so that we're almost looking at overbought conditions here, but not quite there. And you do see that silver cross has tipped upward, which is another good sign in financials. Healthcare, like I said, this has been an area that has been doing well, had a huge pullback, but on the back of, I believe, biotechs and pharma, I believe, are the two industry groups that might be leading this particular charge, but looking very nice here on healthcare. PMO buy signal on the way. And again, some pretty nice participation under the surface. Would like to see more above their 50-day EMAs, but after a big drop like this, it might take a little bit more time for it to recover. Industrials, we're getting a nice breakout here, but again, kind of a long wick, broke out above the 200, pulling back. It's now below it. PMO hasn't quite turned up yet, but again, you're seeing this really excellent increase in participation under the surface, not so as much as say something like financials. And then here is the other issue right here, is that big underperformance against the S&P. So while it's moving up, currently it's not moving up as quickly as the S&P. Materials I've been looking at more closely. Gold has started to look a little bit more healthy. Gold miners as well. And these are the participation numbers under the surface. And while they aren't great, you can see that we did get some really nice outperformance here in XLB. Right now, I think a lot of what XLB is dealing with is what's happening with gold. And then I know with some of those specialty chemicals, some of those industry groups within are outperforming, but a lot of them are underperforming right now. I really like the look here of real estate, and that's unusual because I know that mortgage rates went up this last week, but we are seeing some pretty nice improvement under the surface on real estate, PMO turning up. But as you mentioned before, Dad, I mean, you really want to see those PMOs turning up with a little bit more gusto than what you're seeing here. You talked about technology, so I won't get too far into it, but you can see beat down sector hasn't gotten above those key moving averages yet, still has a PMO that's not quite rising. And yes, we're getting improvement under the surface here for technology, but you would think on a rally like we've seen in the S&P, you would have far more participation. So, usually these rallies are happen off the back of these S&P 10 or the charts you looked at earlier, Dad, but we're not seeing that kind of participation under the surface. So while this rally is great, it's kind of unusual to see that technology is not really holding a leadership role there. Could work in the market's favor, really.
It is my understanding too that these sectors are not cap weighted per se. They are sort of cap weighted, but when you've got a giant like Apple, they're not going to, it would be the sector, you know what I'm saying?
Right.
So years ago, I was working with this problem with GE. At the time, it was really performing great. And I called S&P about it, and they said, no, we don't fully cap weight them because it would just destroy the sector.
But they do slightly.
Yes, there is some effort to do cap weighting, but I'm not sure exactly what the formula is, but it just in case anybody's wondering.
Yeah, and energy, that's another one. I've heard, if you buy Chevron, buy ExxonMobil, and you've bought XLE, is what a lot of people will tell you. But I think it's looking interesting now with XLE because we are starting to see those industry groups within, all of them performing pretty well. So I'm going to go over to our industry summary. I do believe this is available to StockCharts free members as well as paid members. And I do have my own industry group chart. So this is going to look different than your industry group summary. For those of you who are members, you can save a chart with the name of industry summary. the chart style, and then that's what will come up when you do this industry summary. I have flipped through all of these. I usually do because, when you're looking for new momentum, and when we were in a position like we were 2 weeks ago with none of the industry groups with rising momentum, I really had to hunt. But I don't have to hunt so much anymore because a lot of these are starting to outperform. But we were talking energy, looking at that PMO turning up above the signal line here for oil equipment services. So it's looking more healthy, integrated gas and oil. And again, all of these are really somehow tied to crude oil in some way, shape, or form, except for coal. So with crude oil doing well, it's not unusual to see these 4 industry groups starting to see some movement to the upside. But really, when you look at all 4 of these, pipelines having a great day. But overall, I would be looking over at the oil equipment services where you have that turning up of the PMO above that signal line. And really, the rest of them look interesting, but I think that that's the one area just because of the way the momentum is going. Coal, as I said, part of that group, but not really experiencing much of a rally as we're seeing in some of those other groups. I think financials are really starting to look interesting now. The big problem with financials, if you get involved here, is remember that these 20 and 50-day EMAs are well below the 200-day EMA. This means that financials are still configured very bearishly. So if you're going to get involved in this sector, do keep that in mind because it's going to be facing this area of overhead resistance, not only at that 200-day EMA, but also at the August high. So liking the look here, but here's asset managers, and that's kind of what we're looking at as a problem. Banks, same thing. But as you can see, we're getting some very nice stochastic readings, and the PMO is starting to look pretty good. One area that I was looking at pretty closely are all of those groups associated with insurance. You'll notice all of them have rising PMOs, stochastics turning up. They're looking pretty good right now. There's a nice breakout on full line insurance above that 200-day EMA. Really nice look, PMO buy signal coming in for full line insurance. You can see life insurance also doing quite well. 50, 200-day golden cross in the making currently on life insurance. Property and casualty also looking very good right now. And then look at reinsurance, not doing quite as well as the others, but possibly will be, see a little bit of love just because of the fact all the other insurance industry groups are doing so well, but it's certainly the weakest of all of those. Mortgage finance, of course, we have seen those mortgage rates rising, so I would be careful here personally, but you do see the turning up there of the PMO and a silver cross in the making here. The 20 is just above that 50-day EMA, but again, have to worry about the 200-day EMA. But as you can see, I think financials have a lot of interesting movement under the surface. Healthcare, biotechs, as I said, is something I've been talking about with my DP Diamond subscribers for the last probably week and a half, 2 weeks. Healthcare providers also looking pretty good here with that breakout above key moving averages. And medical supplies, same thing, looking pretty good. Pharma looking nice as well with these breakouts above the 200-day EMA. Now, one thing I did want to point out to you is that when you are in this and you see an industry group that you find interesting, let's go back and use life insurance because that one looked pretty good. So if you find a group that you like on this industry summary, if you click here on this little list icon, it's going to bring up the list of stocks within that industry group. So if you like an industry group, you can't trade the industry group in most cases. So this is a way for you to dive in, drill down a little bit more on the StockCharts industry summary. It's something I really like. The other thing I like to do is organize it by the StockCharts technical rank. This tells you which stocks really are doing well relatively to their peers, either the mid caps among the mid caps above the large caps. So you want to see these higher numbers or at least between 60 and about 80 for maybe some of those stocks that you might want to get involved in. Also, you can hover over here and see kind of which ones look good. Metlife looks good just from that thumbnail. So I'm going to pull that one up. And here we go, Metlife. Nice breakout here above overhead resistance. A little bit of a wick going on here, but it looks more like a continuation kind of candlestick, a doji in the making here. But look at PMO, buy signal just has happened. Stochastics looking good. And then notice I do put on the relative strength on my chart. So I put the industry group's relative strength right here. I then put the stock's relative strength next. And then this is kind of the piece that most people don't do. I compare the stock to the industry group as far as relative strength. That way I can find out if I have a stock within that industry group that is outperforming the group. And that means, hey, I'm in a good industry group, I'm in a good sector, and I'm in a stock that's outperforming the group. More than likely, I'll have some success. And so that's why I'm looking here at this Metlife chart that looked interesting from that industry summary. So that is the completion of our sector and industry
Erin,
group overview. Erin, yes.
That Met chart, notice today's candlestick is a potential shooting star.
Exactly. And that's what we were talking about with those long wicks. And that's the problem with long wicks. And let's go to a 5-minute chart. So here's Metlife. And so one of the things I will do is on the other side, I'm going to put up a 5-minute candlestick chart. This is really what a trading room's all about, right? As we look in and see what the buy points and sell points might be on a chart that we like. But this also is a great example of what we're talking about with a shooting star, a really long wick on a candlestick. You get the push generally in the morning on the open, and then you'll start to see it peter out here, moving lower and lower as the bears take control of the day. And so you don't want to see those long wicks, because it really is telling you that, you know, that's a great breakout, but who's in charge? More than likely the bears are taking charge, and we're going to see it move lower. So be careful with that. But since we're on a 5-minute candlestick chart, and I'm going to be talking about those in the symbol requests, most of them, I want to just go over some of the basics of the buy points and sell points based on our decision point indicators in the 5-minute time frame. So we have a 5-minute RSI, 5-minute PMO, and then I do include on balance volume, because it'll tell you, did we get a really good push on this move in volume to the upside early this morning? Well, certainly we did, but we didn't overcome what we saw yesterday as far as on balance volume, and we were much lower. And that's a reverse divergence. Am I right, Dad?
Yes.
Yes. So we look on the for buy points when you get a 5-minute RSI positive crossover combined with a positive RSI. That becomes your conservative buy point. The sell point is determined by when the PMO turns over. Basically, as soon as you start seeing negative momentum on the day, that's generally going to be a good sell point for you. And in this case, it definitely was, because the PMO turned over right here. And you can see that would have gotten you out, not at the top, but certainly early enough to not experience the downtrend that we're seeing here. So if you were interested in Metlife, just based on what you were seeing over there, it's not a good time to buy, because the PMO is still in decline. We still have a declining tops trend line. So what we want to do to really maximize our investment opportunities here is to get in as soon as that PMO starts to turn up. That would be an aggressive entry. The best entry would be generally when you get that crossover and the positive RSI. In this case, it ended up moving right on into some consolidation. But a lot of times we're talking 15 minutes here. By the time you start getting into making the trade, as I know I have, sometimes things do switch over. So you want to make sure you have that confirmation. All right, let's hop in. Unless we had some questions, Dan.
Erin, yeah, I've got a couple questions here I should respond to. Okay, one from Ken. I saw somewhere that buying the close and selling the open made way more dollars than the reverse. Have you looked at the action distortion of markets trading after the NYSE close? Those are actually two questions. I think I'm not familiar with this, but I think a good place to look, it would be Trader's Almanac. And there's a website out there, but that publication has been around longer than me. And it's a good place to find an answer to those kind of questions, but I don't really know anything about that.
Well, I would say that Tom Bowley talks about amateur hour, and that usually the first hour of trading is retail traders, amateur traders. And a lot of times near the end of the day, that's when you're going to get your big money managers dumping their money. They've made their decision. So a lot of times, you know, just seeing what's happening at the end of the day sometimes does give you a little bit more of a hint. And typically you're going to see if we're going to have, you know, a day like we're having today where we want to have a rally, or when the market's ready to rally, you're going to see those first hour trades just go crazy. And a lot of this is, like I said, something I heard from Tom Bowley. Trader's Almanac for sure is going to have some more information on that. But typically, and this isn't, you know, for sure every day, every stock, but typically that first hour is when you're going to get that big move. And a lot of times that's when your retail traders are hopping in early.
Yeah, I've heard, you know, keep your head down the first 30 minutes. But
yeah.
Here's another question. What do you pay attention specifically in the week of option expiration? It seems so many up and down that week and more ahead. Okay, we always highlight this in the DecisionPoint alert when on option expiration week. What you look for towards the end of the week would be lower volatility, because there's a lot of rollover taking place. On end of quarter expirations, you also expect huge amount of volume. You've got the SPY chart up there. You notice back in, what is that, March and December, March, and one's still just about to ready to go off, and that's September. Those were actually option expiration days at the end of the quarter. So you notice they really get huge volume and stands out above the rest. I think there's one you're missing there, isn't it?
I think this one is the June 17th. That sounds about right.
Yeah, that's about right. So that's another end of quarter option expiration. So that's what we look for. And this doesn't always work out that way, but generally speaking, they like to keep it calm while they're doing all their rolling over their positions. And again, and then the high volume, I just remind people of that so they don't think that the high volume is for some giant move of the markets, you know, internal move that people are piling in or bailing out. It's not blow off volume, generally speaking, unless it happens to coincide with a day that blow offs are happening. Then it would probably be even huger than what we see here.
Mm-hmm.
But so generally, that's what we look for.
Yep. So yes, and we do warn our subscribers, like we did on Friday. Hey, this week options expiration. Just be ready. Okay. Any other questions, or do we need to hop in?
Why don't you do some
requests?
CMCSA. What do you look for bottoming out process? It has made several attempts to move higher. What looked like a reversal became a failed rally. 32 has been important support resistance level in 10 years chart.
Yep. So here's a weekly chart just to give you a little bit of a thought process here. So regardless of what's happening on that daily chart, as soon as I look at this weekly chart, I know It's in a solid declining trend. I'm sure I could draw a declining trend channel here without any issue. We can double check and make sure it's not a falling wedge, but I'm guessing that it is a declining trend channel. I don't know.
Definitely going to be a channel.
Yeah.
You could make a wedge there towards the end of it.
Yeah.
But I think
I feel like you'd be cheating.
Right.
Yeah. So see, and we really are cheating because this isn't even I guess, no, that is a bottom because we're looking at this as the trading for today. So even if, I mean, you'd really be kind of trying to put the square peg in the round hole there, I think. But looking at that gives me some pause. I think you were also discussing about the 10-year chart. Was that what he said?
Yeah.
Mm-hmm. So here's our monthly chart. And again, you're right, that 32, honestly, I would look at this and say $30 is a pretty solid support level. We did drop below it slightly, but then managed to move back up. But this looks honestly like there is more downside to go. Just, PMO not looking healthy. But this is the trading room. So we do look at those daily charts just to give us an idea a little bit more here. But again, in that declining tops, that's a filled black candlestick. We were talking about shooting stars. I mean, I'm not like a huge candlestick person. Don't ask me some of the details underneath, but there are certain candlestick formations that I know. Filled black candlestick is one. These are negative candlesticks. They're bearish. They suggest that you're going to get a decline the next day. And that is because, let's look at that 5-minute chart, and this will explain it. So again, it's that same idea. You get the move up, and then you start to pull it back. It's filled black candlestick because of the fact that it's still above the close from the day before, but it's looking iffy because, right, it's pulling back. So filled black candlesticks, you don't want to see. Hollow red ones are good. It's kind of the opposite. It closed lower on the day, but managed to close near the top of its trading range. So those are usually going to lead into a rally the next day, which you kind of saw here too. So
it could rally some more, but it's definitely been in a declining trend channel for a long time. And yeah, I wouldn't be looking at it just yet. Okay,
be careful with those basing patterns, guys, because it may look like it's having a nice basing pattern, but if we're in a bear market, it doesn't matter. We always have to temper our bullish expectations, as we say.
CANO.
Okay. CM.
CANO.
Cano. All right. This is in healthcare providers. Like I said, we're seeing some nice movement in a lot of those. Okay, again, boy, these big pops in the morning, although this happened Friday night, so that was probably, what's going on there? Continued a little bit today and then has been in a decline the rest of the day. You can see that price is now below the 200. Like I said, you're going to get those breakouts, generally a pullback to the breakout point. I would not really want to see it close beneath that 200-day. It kind of gives you a sense that it's going to continue lower. We don't quite have a breakout here. And you can see that there's the top right there. And you can see we didn't quite get to there before we pulled back. So we do need to be a little bit careful, but certainly are a lot of bullish signs on this chart too that can't be ignored. Positive RSI, PMO bottoming above the signal line, stochastics bottoming in positive territory. And overall, I mean, not bad as far as relative performance. Certainly over the past month, it's been outperforming its group. When the group does well, it seems to do pretty well itself. But overall, just be careful here because the fact that we did get the breakout, but we are seeing that pullback. And honestly, folks, when I look at what's going on in the market today, overall, positive day currently, but I don't like to see the way we're pulling back. It just has this feel of an exhaustion to me.
Right. We've got, I watch Fox Business when I wake up in the morning for about 30 minutes, and the usual suspects are once again out there thinking that the Fed is going to be dovish, and it's just, the optimism is undeserved at this point, I think.
Yes.
That's where these rallies, part of where these rallies come from.
Yeah, a lot of that news and noise. So we have to kind of parse that out. And that's what we try and do with our decision point alert is, hey, we're getting this kind of movement, but really we have to look at the technicals. I'm a purist, for better or worse. I mean, I do pay attention to earnings dates, but to me, everything is on the chart. All of the emotion is on that chart, and a lot of the other stuff is going to be baked in as far as news. So really, I'm looking for that. Cano Health, I just happened to pull up the weekly chart. Doesn't look so bad here. Nice rounded bottom, but we do need to see that breakout above that level of overhead resistance. It's looking a little bit iffy on the daily chart because it is pulling back. But again, I can't really fault it because it did break out and now it's pulling back to that breakout point. And overall, the indicators look pretty good. I'd just be really careful opening a lot of new positions right now.
Okay, LIT, lithium.
Lithium. I've been talking big time about uranium, but lithium is sort of an unsung hero here. Materials, like I said, I'm liking what's going on there. So right out of the gate, I'm going to be I'm not going to be super bullish here, but it's just an area that I think we're going to be starting to see a little bit more action. Lithium, it looks good. I see a V bottom. It's retraced more than 1/3 of the decline, and that suggests you're going to get a breakout here. So based on the chart pattern, that's what we're seeing. You've got a 5-20-day EMA crossover just about to happen. 20-day came down, but didn't have a negative crossover. RSI is positive, but kind of flat. This PMO is just not very enthusiastic. I think given a V bottom, typically on a V bottom, you're going to see a similar action with the PMO. It's not looking quite as excited about this rally. And so that would give me a bit of pause there. But you can see outperformance starting here in September against the S&P, which is good since the S&P has been doing fairly well. Stochastics looking positive. I have a bullish outlook on materials and on lithium, uranium. I mean, I like this look. So V bottom, everything looks good, but that PMO has me worried.
Weekly chart.
Yes. My dad's always got the eye for that more of an intermediate term, which is one of the great things about having you here in the trading room.
Yeah, I'd like to at least see a 1-year chart. And certainly, I usually look at the weekly because that gives us, a big picture of the term.
Sets
So it
the
looks
backdrop, right?
Excuse me? Yeah.
It sets the backdrop.
Exactly. And that one looks like it's a nice saucer bottom. So
yeah, and I would guess
let's get that come in there.
Let's get that thumbnail on there. But the weekly PMO, yeah. Bottom above the signal line on the weekly PMO. So again, I think that it's reasonable to be looking at lithium in a bullish light based on the weekly chart, based on this V bottom. And then today, seeing that little pullback, let's go over to a 5-minute chart back here. I'm going to update it because, again, you see something, then what do you do? How do you get in? And again, this is not a call to action. I'm just giving you an example here. But what we're looking for, again, positive PMO crossover and a positive RSI. And we just got that. So at this point, this is considered a conservative buy point on this one, but just be careful. Big time volatility here. Symmetrical triangle could break either way, but that's just to give you your entry and exit. Looks like the entry is coming in right now, but be aware, you've got a flat PMO. We could end up seeing this up and down all day, but this should give you a little bit of some insight on when is the best time to get in.
Okay, let's try KOS.
Okay, all right. Were there any comments to go with this one?
No, a long. He wants to know
what
it looks like for a long.
I can see why. I can see this nice little bounce. So I see where you're coming from. I'm just having a little bit of heartburn here that it's gotten to these key moving averages. And while it was up Friday, it's a filled black candlestick. And it's looking a little bit iffy here. We had, again, that big move pulled back, but PMO on the 5-minute is still heading lower as far as entries go.
Weekly?
I don't know. I think, as I often say as a mom, you know, to my kids when they leave, make good choices. To me, I think there are better choices that could be made than on this particular chart. But energy certainly seeing a little bit more action. But I think it's just a little early on this one with the PMO sell signal still in effect here. So I don't know that this would be the one in that sector that I would personally be going with to open a new position, just because, you know, the setup just isn't as positive. And notice that it underperforms against its group. Even the group was doing okay. So again, better choices. I think there are better choices within this area.
Okay, we have one here. He wants to know CRWD versus PANW for a swing trade long, please. I'm
Excellent.
a trader, so I don't.
Oh, this is perfect. I love doing these.
Oh, you do? Okay.
Yes, I call them this or that. So let's go over here to my thumbnail so I can hopefully get most of these on here. Okay. So I can do this over here. It's a little bit wonky because I don't have the left side of this chart. So this is PAN-W. This is CrowdStrike. So when you're looking at two, they're in the same industry group and you're kind of going, well, which one do I want? So price action, I can see it's really very similar. You could make a case that they're kind of doing the exact same thing, but how do you determine which one's a better choice? We have 3 minutes. What I look for, remember, is we do that relative strength at the bottom. What is that stock doing against its industry group? That's going to tell me which one is probably better than the other. So this one, we can see near-term strength on CrowdStrike. And if we come down here to PAN-W, oh, this one's kind of tough because they do have a very similar look as far as outperformance goes. I would have to say, though, when I look at overall, seeing that PAN-W did really have a nice move out. It's got a nice rising trend on its strength versus the group. So I have to say, I really would say this or that. I would kind of be leaning over here to PAN-W, and notice too, stochastics bottoming pretty much in positive territory. Didn't see that over here. PMO is kind of making that move with a whipsaw buy signal. That looks a little bit more healthy. Don't like the filled black candlestick coming in here, and I do prefer this candlestick and breakout above the 200, but PAN-W is already broken out above its 200. So I think if you're doing a this or that, that would be PAN-W. I have to say I like better than CrowdStrike.
I agree. You want another one?
Yeah, actually, let's go ahead and we're going to have to close this out. Sorry, guys, but come back here live next week on Monday at noon Eastern. Again, if you're watching the recording, you want to join us, go ahead and go to our website. The homepage has a link right there for joining us here in the Trading Room Live. And I just want to thank everybody. Let me get my stop share here. Thank everybody for being here in the DecisionPoint Trading Room. Look forward to seeing you next week. Should be another exciting week of trading. And with that, I will say good luck and good trading from Carl and I.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.